There are a lot of good signals in the market that will make you good money, but the main question is, can you wait for those signals? Now, today's video, I'm going to be talking about market structure, main structures, and internal structure. What I find out over time is that a lot of traders tend to trade from the internal structure, not using the bias of the main structure, because most of them are in a hurry to trade, they are in a hurry to take action. But on today's video, I'm going to make you understand internal structure, main structure, and how to understand where you are exactly at in the market. So this would be a comprehensive market structure video here, and the next screen you'll be seeing is my screen on how I'm going to walk you through the entire steps. So your ability to differentiate between the internal structure and the main structure would save you unnecessary losses here. So let's start with the main structure. Now we already understand how markets move in waves. If we have an uptrending market, and this is very easy to spot on the daily time frame or the weekly time frame here. If you have an uptrending market, it's very easy to understand where the market is going on the daily time frame. But where the confusions of internal structure comes in is when you start to scale down to lower time frame. So on the higher time frame, it is very easy to tell where we are going to. We might be heading up or we might be heading down, and on the higher time frame it's much easier to tell. Yeah, so this is a downtrending market. This is how the market move when we're on a downtrend, and that is how it moves when we're on an uptrend. Now what you should understand is that you want to make use of both the higher time frame and the lower time frame to confirm your bias. So let's say this is the daily time frame, and we have something like this on the daily time frame: higher highs, higher lows, and higher highs. Now on the daily time frame, this might just be one move. This might just be a single expansion on the daily time frame. But if you come down all the way to, let's say, the 15 minutes, the 45 minutes, this particular move will give you another series of structures like this. And these are the internal structures. Now you want to be very sure, you don't want to confuse your internal structure for your main structure. These are internal structure. In most of the cases, all of the lows that would be created here would be liquidity, so you don't want to confuse them. Now the first thing you want to do, mark out your main structures. Once you have the bias of your main structures, then you want to now understand your internal structures and where to take trade of them. So let's say this is your main structures now. Your internal structures would be here on the lower time frame. So we have a break in market structure here at this point. Now whatever is happening at this point here, from this low to this low to this high on the lower time frame, are all internal structures. You see series of expansion, retracement. They are all internal structures, and you don't want to, in most cases here, you want to even avoid trading off internal structures unless you just want to use them for additional confirmation. So let me give you an example of how these structures might want to affect your trading sometimes. So let's say we have a high, we have a low, and we have a high. And from this point, you started to see these structures like this. Started to see market creating all of these structures like this. Now, on the normal sense, this is a downtrending structure. The market has started to show us signs of weakness from this point. But if you still take a look, we still have the main structure here. Where is the main structure? This here, this low over here, is the main structure we have for a change in market trend. This is our break in market structure here. So this is a main structure we have for a change of market trend. Now, can you catch trade from here? It's also very possible to catch trades on internal structures here. But you want to know exactly when to stop looking out for trades on internal structures. It's very decent to look for trade on internal structures when we have an expansion. Then you see your confirmation, you can take a trade from there. But you don't want to take a trade when, let's say, we have this market still declining, and get to all of this point. Now this point is this is a very good demand zone here on the main structure. This is a good demand zone on the main structure, and the market can decide from this point, after taking any other internal liquidity we have here, you can decide from this point to just bounce and continue moving in the direction of the main structure. So if you are here and you are trying to catch another sell from this point, you are thinking the market might respect the supply level in which we have here and bounce. While it might happen sometimes, in most cases the market will just bounce from there and respect the main structure, the flow of the main structure. So let's see this on some pairs here. Let me use BTC for an illustration. So this is BTC on the 4-hour time frame, and we saw that the market was trending downwards all the way to this point before we had this low here. We had this high here, the market sweep, then it changed structure and just keep trending all the way up. Then we had a retest at this point where the market came to retest this OBA, and it just continues selling upward. So as you can see now that we can now clearly identify where the chart is going to: up, down, higher highs, higher lows, higher highs. Now from this zone, this is also a high. Now let's go to the lower time frame, let's say the 45 minutes. Now on the 45 minutes here, you can see what the market did here. After I created this high here, and it went back and gave us this low. After it gave us this low, what do you see again? This is one expansion here on the 45 minutes. Now on the higher time frame, this is just an expansion, but if you see on the 45 minutes, you see that the market created all of these structures here. All of these are internal structures, and most times if you want to try to get trades from internal structures here, you are just going to be served as liquidity. That's why you see that after we had the market expanded to this point, it came all the way down and cleared all of these structures before continuing the main move. Now if you are trying to catch sales again from this point, from any supply level here, the market will still go all the way up and clear all of those internal structures here. So you want to avoid using internal structures and focus on main structures. Now, how can you focus on main structures? Let me give you an example. Let's say we have highs, lows, and highs, and the market started to give you internal structures which you are not sure what you want to do in the market. Now you can try to get a retracement, because we have a point of interest here. If the market reacts from there and they give you an entry criteria, you can take it. Now you already understand that the market is going to clear all of this zone after it's changed structures here. Then the market will just go up and clear any other internal structures in which we have here. So you don't want to be using this zone, or this supply level to catch any trade, because when the market is coming back down, it's going to clear up everything. Now what you should be focused on is waiting for the market to take out this zone here to continue in the flow of the market. Now if the market take out this zone, this is when we have a double break in market structure. I call it a double break in market structure because all of what happened here are just single breaks. They are internal structure, they are single break. But whenever we have a double break in market structure, then you can also now look for another entry criteria. Might be inducement, liquidity, point of interest, and continue flowing with the market. But you don't want to get caught trying to trade the internal structure most of the time. Now mind you, sometimes it works, and I'll advise you trade internal structure if you are looking for confirmation to join a trend. So if you see what we have on this trend here, this zone is a point of interest here, this level is a point of interest here, And it's very okay at this point to use internal structure as a trade bias to jump into the market, since you already know that okay, as this trend, as if this point of interest holds and it changed structure from this zone, you know that it's going to clear all of this place. So using internal structure for confirmation here is valid, but using internal structure to catch trade in the internal zone here is something that would cause you losses. But you just have to train your eyes to understand it over and over again. So that will be this video. That will be it for this video. I just said I should share more light on internal and main structures here. So see you on the next video, and make sure you subscribe to the channel.